All right, let's get right into it. The way we all use money is changing, and it's changing fast. But what if I told you the next massive shift isn't coming from some flashy startup in Silicon Valley? What if it's coming from the very institutions that print our money? We're talking about central banks. And this is a revolution that is already well underway. So take a look at this number, negative 20%. Now, that might not sound like a huge deal on its own, but what it represents is nothing short of a seismic shift. In just the past 5 years, the use of physical cash for payments worldwide has cratered by 20 percentage points. A change that big and that fast, well, it creates a massive power vacuum in the financial system. And this quote from the University of Florida Law Review just hits the nail on the head. Because with cash fading into the background, the door has just been thrown wide open. See, this isn't just about some cool new tech. This is a fundamental battle for power. It's forcing a question that governments absolutely cannot ignore. In this new digital era, who's really in charge of the money? As physical cash takes a step back, private innovation has rushed right in to fill that gap. I mean, we've seen everything from Bitcoin to this enormous market of private digital currencies. The stablecoin sector alone, it's now worth over $300 billion. They are all trying to answer that exact question. Who gets to control money? So this has basically created two very different paths forward for digital money, two main contenders, if you will, that are battling for the future. In one corner, you have the private sector's champion, stablecoins, and in the other, you've got the official government response, Central Bank Digital Currencies, or CBDCs for short. Okay, so what on earth is a CBDC? The simplest way to think about it is like a digital dollar bill or a digital euro. But here's what makes it so different. The money in your bank account right now, that's technically just an IOU from your bank. A CBDC is a whole different beast. It would be a direct claim on the central bank itself. That would make it, without a doubt, the safest possible digital asset you could ever own. And then, of course, we have stablecoins. These are the private sector's answer to the wild volatility we see in other cryptocurrencies. Their entire reason for existing is to provide stability by tying or pegging their value to a real-world asset, usually a major currency like the US dollar. This table really breaks down the key differences perfectly. Your bank deposit, issued by a private bank. A stablecoin, issued by a private company. But a CBDC, that's issued by the state itself. The most important part, though, is that very last row, legal tender. A store can tell you they don't accept your stablecoin, but with a CBDC, they would have to take it. It would have the power of cash, just in a digital form. Now, let's be really clear here. This is not some quiet academic debate happening in the background. No, this is a full-blown, high-stakes global race. And believe me, the outcome is going to have massive, massive implications for the entire international financial system. Get this, we're talking about more than 100 countries. That's pretty much the entire global economy. All of them, right now, are either exploring, actively developing, or in some cases already piloting their own CBDC. From small nations like the Bahamas to China's gigantic digital yuan project, this is happening, and it's happening everywhere. So why is everyone in such a hurry? Well, there are a few big reasons. First, central banks want to reassert control and push back against the rise of private currencies. Second, they see a huge opportunity to upgrade the old, creaky plumbing of the financial system to make payments way faster and cheaper. And then there's the really big one, geopolitics. This is about power on the world stage. It's about making sure their currency remains dominant. But, and this is a huge but, as we start talking about digitizing the very foundation of our money, we slam right into a wall. And that wall is probably the single biggest, most important question in this whole debate. What happens to our privacy? I mean, here's the fundamental trade-off. Cash is anonymous. You buy a cup of coffee with a $5 bill, and the only people who know about it are you and the barista. There's no data trail. A digital currency is a completely different universe. By its very nature, it's traceable. Every single transaction could, in theory, be logged, recorded, and analyzed. And this isn't just an abstract idea, this could be a total deal breaker for people. Focus groups run by the European Central Bank found that, people love the convenience of instant payments, but they also deeply value having control over their own personal data. For a CBDC to actually get adopted, people have to trust it. But here's the view from the central bank's side. For them, complete cash-like anonymity is just not a desirable feature. They argue, pretty reasonably, that total privacy would make it impossible to stop things like money laundering or terrorism financing. So they're looking for a balance, but they've made it crystal clear that some level of traceability is completely non-negotiable. So, okay, let's play this out a bit. Imagine these CBDCs start launching all over the world. What happens to the market then? Well, the potential impact is enormous, and it brings us to this economic concept called the crowding out effect. The logic is actually pretty simple. The government introduces this perfectly safe, 100% risk-free digital currency. So you, as a user, have to ask yourself, why would I keep my money in a private stablecoin that has some level of risk, even if it's small, when I can hold the official, government-backed version? And just like that, you could see public money completely crowd out private digital money, totally upending the market as we know it. And hey, don't just take it from me. Listen to what the central bankers themselves are saying out loud. The deputy governor of India's central bank was incredibly blunt about it. He said a CBDC would kill the case for cryptocurrencies. I mean, you really can't get much clearer than that. So the whole thing really boils down to this one simple question. If you can hold the real thing, an official digital dollar, why on earth would you ever need a private stablecoin that's just trying to be an imitation of it? All of this leads us to one final enormous question. Is this whole CBDC movement just the next natural step in the evolution of money? We went from shells to coins to paper. Is code just the next stop on that line? Or is it something else entirely? A revolution in control that gives governments a level of insight into our financial lives that was never before possible? How we answer that question? Well, it's going to define our world for generations to come.
This is not financial advice.